right, the numbers are in. The numbers are in. And I'm not talking about Amazon's earnings. They were down, and Amazon stock is down. Last I looked, about 7 or 8%. The numbers I'm talking about are the weekly reserve balances. You know, that's something I've been focusing on, and it has been a big focus of media attention, particularly these financial blogs. And, you know, I've been talking about zero hedge. They're all hysterical about this. So check it out. And I sent out an email to my subscribers on this. If you want to get the detailed inside information and what it means, you got to go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. All right, so in the week ending October 23rd, that's the week ending yesterday, where there was a total, and I tallied it all up, the Fed did 465 billion of these operations. Now that wasn't all, you know, permanent ad or even 14-day ad. A lot of those were one-day overnight repos. So the total amount added with the 14-day term repos was something a little over 200 billion. So in that period, in that 1 week period, right, what would that be like from the 16th of October to the 23rd, the Fed added over 200 billion via these monetary operations. And guess where reserve balances are, or guess what happened to reserve balances? They actually went down by 18 billion. So reserve balances ended the week at 1.45 trillion. So again, Fed is keeping reserves exactly where they said they were going to keep it. That is the level in early September. That's where it was in early September. So it goes to show you, if they were not doing these operations, reserve balances would have fallen below the threshold that the system needs. I mean, what does the system need? Very simple to calculate. 10% reserve ratio on deposits. There's 13 trillion in deposits right now in the system, a little over. You need at least 1.3 trillion. If they didn't do this 200 billion ad, we'd be in the 1.2 trillion, so you'd be short of reserves. Banks would, you know, be bidding up the overnight lending rate to try to borrow reserves. So they have to do these operations in order to maintain their policy rate. Okay, this is nothing crazy or any kind of meltdown or losing control like as it's being portrayed in these ridiculous blogs. This is normal policy. Now, what was not normal was going back earlier this year, how the Fed guided reserve balances down to, like, who was in charge? Powell, obviously, but I mean, somebody had to be at the New York Fed, where they conduct monetary operations and they carry out Fed policy as it is dictated to them by the FOMC in Washington. It's the New York Fed that carries it out through their desk. Somebody had to be looking at this saying, hey, you know what? Reserves are getting low. You got 13 trillion in deposits in the system, and look, we're right there at the threshold, and they kept on going, you know, whistling past the graveyard. So somebody was not paying attention. Anyway, like I've been saying, the Fed is now rectifying the situation. This is a source of stability. Now, we have an event coming up, a monetary event, around November 1st. For that, I'm sorry, you're going to have to sign up at least for a 30-day free trial of MMT Trader. You know, some of you post comments here say, Mike, you predicted this, you forecasted this. If you're not a subscriber, you don't know what I'm predicting. All right, I put up general things here. When I say the market is going higher, it is going higher over time. But we also trade these short-term reserve flows, okay? Fiscal support is enormous right now. It ended the fiscal year on September 30th at over 5 trillion. It's going up by another 200 billion this year. Fiscal support is massive, okay? That's why we won't have a recession. And so that is, as I've said many times, that is the tide that lifts all boats. I mean, that is just keeping the economy expanding, which means corporate profits are going to grow. They might not grow as fast as they had been growing, but they're going to grow. And if corporate profits grow, the stock market is going to go up. And we are not going to go into a recession. However, and that is bullish for the stock market longer term. Sentiment is negative, so we do not have an environment, at least psychological environment, where people are euphoric or very, very positive. No, it's the opposite. But there is also opportunity for traders, swing traders, if you understand the movement of these flows. And that's something I put out, to my subscribers. So when you post comments here, you're not getting, what I'm telling you is the bigger picture information, the detailed stuff that comes in my subscription service. Anyway, you can go there, pitbulleconomics.com, sign up for a 30-day free trial of MMT Trader. Oh, one more thing I forgot to mention from earlier today, and this is pretty interesting. Turkey cut the interest rate today by 250 basis points, 2.5%. Big interest rate cut, all right? That is bullish for the Turkish lira. Now, if you go back earlier this year and actually last year, remember, the Turkish central bank was raising interest rates to try to fight inflation, not understanding that rate hikes equate to increases in inflation, because rate setting is price setting, right? The cost of credit is reflected in the cost of all goods and services. So when the central bank raises rates, it raises the general price level. When it cuts rates, it lowers the general price level. That's how come in a country like Japan, which has negative rates, or Europe, and Japan is a great example, because they're sitting there for how many years now saying, hey, we don't understand why inflation is so low. We can't generate inflation because you got negative interest rates, you got zero interest rates, whatever, and they think that that doesn't. So getting back to Turkey, anyway, the central bank, they were raising rates, the lira was getting crushed, and Erdogan, the ruler over there, he kept saying, look, you got to cut rates. And the entire economics community was up in arms. They couldn't believe that he would say something that they thought was so stupid as that. As a matter of fact, he had it correct. He had the correct MMT understanding. He kept saying, if you cut rates, you lower inflation and you help the currency. Well, guess what? He fired the central bank guy. He put his own guy in there, started cutting rates, and you know what happened? Lo and behold, inflation started to come down and the lira started to rally. So they cut rates today. I bought some Turkish lira. The lira is going to rally. That's how it works, folks. That's how it works. So here is Erdogan, who was alone against the entire community of mainstream economists. He understood MMT, and he was correct when he said, you got to cut rates to bring inflation down. And eventually when they did that, that is exactly what happened, and the currency rallied. All right, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Bye-bye.